Hey Slopers, Brian Johnson with thestockmentor.com. Here to do a quick video for you. Been following a lot of the posts over the last weeks, as I always do, and I really haven't had a whole lot to add. Most everything that I would have said was being said by Tim Knight and the other contributors. I think right now I'm probably more in agreement with Fujisan. What I'm seeing is very similar to what the Fujisan is seeing, so very nicely done. And so here are my lines, and this is the way I see it that I do a quick video for you because there are a couple other things I'd like to point out and give you guys something to chew on over the day before we open up tomorrow. The Bulls really have, they're not trying very hard here. If you're watching price action and you're really studying it, they're really not doing a whole lot here. They've got a lot of work to do. This 10,500 level, I think, is big based on where we are right now on a 60-minute chart of the Dow. But you can see the Bulls are not, they're just not, there's no major push here at all to shove this thing upwards. Above 10,300 maybe gives you opportunities to 10,500, 10,450, 10,500 area if you want an intraday trade. But if you're a swing trader and prefer to get in and stay in for a while, you can see based on the daily chart here of the Dow, there really hasn't been a lot of opportunity to do that. As of 7-8 sessions ago, we're right about in the same area. So we really haven't moved a whole lot. There has been movement for intraday traders, but if you're a swing trader, you're kind of stuck. Now, if you do not know how to short, if you're not familiar with shorting, I suggest you get familiar with it. As you can see, it took 2.5 months to get up to this high point here and all of about 2.5 weeks to get right back down. For those that trade and both play both sides of the ball, offense and defense, you can see that there's obviously a lot of quick money to be made to the downside. So if you do not know how to short, I would highly recommend you get yourself an education in that, learn how to do it. It's obviously very important. Now, as we go forward, watch these 200-day moving averages. Those are going to be the first line to defeat. They could be very tough. We've been underneath of them for a while, and the longer we hang below them, the tougher it gets to get back above them, at least on initial attempts. Now, we've come pretty close enough in my book to call retests of 200s, but the NASDAQ is the only one of the major indices that has managed to get above and stay above the 200-day moving average. Not uncommon, since on the NASDAQ is typically a much more stronger index, as is the Russell's. Russell's is very strong too, but when I'm talking about the Dow, the NASDAQ, and the S&P for the quote-unquote major indices. And the 200 will be very difficult to defeat. Now, anything back below this area here, and especially a pushback below this line, is definitely something the bulls do not want to see. This is very staunch support down here. This would also make for a good entry short from a swing trader's perspective. Otherwise, wait till it breaks 10,500 if you want to swing trade this. You are, and potentially could be, chopped up if you decide to try to swing trade at any other time. You can see we have not gone anywhere in the last couple weeks. NASDAQ on a 60-minute holding above here, looking to retest this upper blue line. But if you follow price action, there's no real major push by the bulls to push this thing up. Got to get above this line if they want to even stand a chance at any higher prices into the NASDAQ, at least in the short term. Here you can see it is above the 200-day moving average, holding nicely up in this area for the time being. But look, we've got the 200 below us, we've got the 20 above us, we've got this falling trend line above us. Still in a tweener mode, guys. We're just stuck in chop right here. Got to be very careful if you're swing trading this. Your best bet is really to start looking at stocks that are moving nicely one direction or the other, and kind of stay away from the indices if you're a swing trader. There's been good moves for day traders, but swing traders, there's just no real plays in here. SPX on a 60-minute, you can see it doing the same thing. Still no push by the bulls. We are above the 50 period. We got the blue line above us. We're caught in chop. If you guys don't know this already, the best thing to do when the markets are moving sideways is to sit on your hands and save your money. Most of the time, you'll jump in, you'll get impatient, you'll lose money. By the end of the day, you go, that was dumb. Why'd I even trade? Exactly. Why did you trade? Sit on your hands. Not losing money means you're making money in the longer run. Capital preservation is key in this business, and you've got to know when to play your cards and when to fold and just go ahead and sit the hand out. When things are chopping sideways, it's best to just let it do what it's going to do. Look to individual stocks. Sometimes stocks are moving beautifully during this time. So you don't always have to play the indices. From a daily standpoint, same thing here. Come back up, touched the 200-day moving average, and was turned away. This is a major place to defeat. Look at this. I'm really not a swing trader long until we get above 1130. Look at all this overhead resistance that we have. I mean, what a mess I have on my chart, but it's all valid. It's all overhead resistance that needs to be cleared before I can really start looking myself anyway at some longer term swing trades within this market. Now, here's the chart I really wanted to show you, and I want you to pay attention to moving forward. I love this chart. This is the EW. I pull this chart out every now and then for you guys, and it's the SPX equally weighted. So everything is of equal weight according to this chart within the SPX. And look how beautifully this lower line is holding. This is textbook TA right here. I love it. Love it. Held the 200 nicely. Had that big move. We call this what? Fat finger, I guess. Fat finger day is what one of my students told me one time. Fat finger day. So it held nicely to the 200 day moving average on the equally weighted chart. This is a gorgeous chart. Okay. Breaks and closes, more importantly closes below this 1575 area, really start to give the bears something to sink their teeth into. This would be a big start in to really pushing forward this what we think is going to be a new bear move in the markets. If that's going to happen, this is the first place I'd be looking. So please watch this chart. Keep it probably. I'd keep it around for a couple weeks at least, and just see where we end up going. I love the fact that this is holding as well as it is. So want to bring that to your attention. Hopefully it helps you out in your trading. At least gives you something else to watch as we proceed into the new week of trading. Now remember, we're into June. All monthly candles have been reset, and so it's a whole new ball game when it comes to the monthly candles. We'll see where we finish this month, but you'll see that we have a pretty big bearish engulfing on last month's candle. All right, guys, take it easy. Safe trading. We'll talk to you later. Bye.